Welcome to the payroll lesson, and let me start by saying I could do a whole module on payroll, several videos on payroll. For large businesses, payroll can have all kinds of tricks and traps waiting for you. But for my system, the Halon system, we don't do a lot of complicated payroll. Most of these businesses are just owners being on payroll. Some of them have a few employees, but they're not terribly complicated. And I also recommend that you use some kind of service to do it, to run the payroll, to file the taxes, etc. I don't care completely which system. I have offered a very affordable option in Patriot, but it is not required in any way that you use them. I think they're the best option for making money at this. But Gusto, Sure Payroll, all of them have some pros and cons. So use what you want, but do use a system. I think it's way too slow to do payroll and too inefficient to do payroll on your own where you're doing your own tax returns and all of that. So I'm going to walk you through and kind of talk about today the tasks that are related to what we have to do in running payroll in the system. And I'm going to stay away from the tasks of the payroll company. We're not going to get into payroll taxes and things like that because we're going to leave that to the payroll company. For many of you, this is going to be already known. You already know what most of this module is, and honestly, it may be a little bit of a waste of your time. So let me say I'm sorry about that. For those of you who are not familiar with payroll, you are about to be, and you may need to watch this video a few times in order for it kind of all to sink in. So we want to make sure we cover all the bases. Let's get started with some of the payroll basics. So here's our basic example, and we'll be using kind of this example for some of our discussions today. There are other items that can be added to this kind of summary, like a 401k contribution. I don't have that on here, but many of your business owners are going to want a 401k contribution because I'm going to show you later how to offer them 401ks, and they're great tax planning tools. But we'll cover that later in a later lesson. For now, this is what 75% of your small S corporation payrolls will look like. It's got the employee information, the employer cost, and we're gonna kind of get into all of this. On the left, we have what the employee would see. So you can see here where we've got the $1,500 for their gross pay. We've got the federal withholdings, the Social Security and Medicare, and the state withholding. These are all subtractions to where their net pay comes down to $1,175, right? And remember, when we're talking about employees in these simple S-corps, it's almost always the owner. So in this lesson, think of owner and employee as really the same people. It all starts with gross pay, and this is going to be based on like a monthly payroll. So if we're doing $1,500 of gross pay for the monthly payroll, that means they're being paid $18,000 a year, and we're going to get that off of our owner's compensation matrix. But payroll is really just a lot of math. So what we're showing here is we start with gross pay, and then we subtract from it the withholdings, right? As I mentioned just a second ago, we're going to subtract from it the federal withholding, the state withholding. These are credits, right? These are deposits that the employee is putting with the tax organization, either the federal IRS, that's where the federal withholding goes, or their state Department of Revenue. And these will go to offset income taxes when they file their personal income tax return. Then we have Social Security and Medicare. Collectively, these are called FICA. So it adds up to 7.65%. 6.2% of it is Social Security, 1.45% is Medicare. And this is the way you calculate this is it's just gross pay times 6.2%. That is what they have to pay in. Okay. Now, when it comes to FICA, there's also a side on the employer side with this, but let me kind of get into that here in just a second. Just know that this amount and the Social Security, Medicare on this amount, they're equal. So whenever we are calculating for folks what the advantages of the S corporation are, we are really kind of bearing down on this self-employment tax, because when you think about it, self-employment tax is 15.3%, and FICA is also 15.3%, just 7.65% to the employee and 7.65% to the employer. So in addition to the employee check, we have the taxes that the employer pays. I just mentioned part of that is their half of FICA. And then we also have the federal unemployment and the state unemployment. Okay? And I've just thrown some numbers in here. The federal unemployment rate is usually like 0.6% of whatever the pay is, up to, I want to say it's like a $7,000 wage base. And then state unemployment can vary based on your experience factor. The main thing I'm wanting to drill in this slide is what the payroll has actually cost the owner employee. Okay? This can be really confusing, so I want to make it very clear. The cost of the payroll is the FICA tax on both sides plus the unemployment taxes. In the absence of payroll, the owner would have those funds in their pocket. The withholding is not a cost. That is a deposit, as I said earlier. That is a deposit with the government to use for taxes. And the net pay is not a cost. It's just moving money from their business to their personal. So, make sure you understand that whenever they say, well, I don't want to run payroll, it's going to cost me $1,500 a month and I'm losing $1,500 a month. That's not true. All they're losing is the employer side taxes, this 216, plus the Social Security here. Now, one could say that they don't even really lose that, because the FICA taxes themselves are going into the Social Security buckets and the Medicare buckets of the government that they will later use later in life. I think we need to call them costs, because they're really, going out the door. Unlike withholding that they get to use later that year to offset their income taxes. Does that make sense? It's an important calculation to understand, and you want to be able to kind of talk about it upside and down, because if you don't and they sense that you're not quite sure about it, they'll begin to believe themselves, and that's not what we want whenever we're in some kind of sales meeting. When I calculate the cost of payroll in sales, I always use the FICA cost and I ignore the unemployment. Okay, so you might be thinking to yourself, well, I need to somehow calculate this unemployment whenever I'm trying to show them what the cost of the S corporation is going to be. I never do that. This is because the unemployment is not a cost on all amounts through the whole year. Federal, as I said earlier, is just on the first $7,000 that they pay themselves, and the states vary. Some states can be as low as $6,000 or $7,000. Other states can be as high as 13, even 15,000, I think. So it's a moving number, but it is not a significant amount, because we don't tax it on the whole thing like we do Social Security and Medicare. Whenever we're getting into like $100,000, the unemployment is insignificant compared to what the SE tax can be. So get used to knowing the cost. It's a key element in selling, and it's a key element in understanding how payroll works. There are several videos and training courses about payroll if you really want to get into it. If you've never run payroll before, Patriot, Gusto, Sure Payroll also have resources for you. Use that. We're going to assume that you've got some of the basics down, and as we move through here, we're going to really get into the how do you operate your business offering payroll piece. So I'm going to go into payroll frequency next, and you'll get a kind of a feel for what I'm talking about. So now that we know the basics, the first issue we have to decide is what the frequency of the payroll is going to be. That is because our billing is going to be different based on how often we run the payroll. Usually at my firm, we run the payroll monthly. That is what we set up. There is some reason to run it quarterly, but I don't like that. I like better having the client have a consistent monthly amount. As I said, I like the idea of quarterly. It would be less work, right? I would only have to run payrolls once a quarter. But I find that from a client budgeting perspective, where they're budgeting having that money ready for a payroll, it doesn't work very well. It's hard for them to remember something that comes every 3 months, and the quarterly payroll amount is larger because you're running it for 3 months, and it becomes a big hassle because you'll go to run the payroll and they won't have the cash. They just 2 days before that ran some other expense, or they pulled it out so they could go on vacation or something, and they forgot, and they get mad at you and say, "Why aren't you reminding me? I need reminding 20 days before the," that kind of thing. When it's monthly and it's on the same day of the month, it's harder for them to make that kind of case. So I like monthly. Let me also dive into this idea of biweekly and weekly. If a client wants biweekly or weekly payroll, that is going to cost extra. Okay, and I mean on top of we charge $100 plus $6 an employee for monthly. And if they want biweekly, at our firm, the cost goes up to $150 a month plus $6 per employee. And I don't have any weekly payers in my firm, so I don't know what I would probably price that at. I think if I had someone come in weekly, I would price that around $250 a month plus $6 for each employee that was on it. Because if I had to touch that every week, I need to be paid well. Otherwise, it's not worth it. I might even make that $350 because weekly's a lot of work. So price is going to help your client decide what option is best. And once you have the billing figured out, you're ready to get the payroll tax registration set up if they don't already have registrations for the states and that kind of thing. And that is my next slide. So let's talk about registrations. This is easily my least favorite part of payroll. Getting the businesses set up with their registrations for state withholding and unemployment is not really much fun. Each state is a little different. And as long as the business has an EIN, you're all set for the federal stuff, but for states, you have to do some work. And I know what you're thinking. I'm sure at this moment you're thinking, well, is this included in our fee, or do we charge them extra? You probably won't like my answer, but for us, at my firm, it's included. Whenever they decide to sign up for payroll, we are going to help them or even do the work of registrations. In the state of Florida, where many of my payrolls are, we don't have state withholding, so it's really just setting up Florida unemployment, and we can do that online, so it's fairly painless. Other states are not. So get familiar with the states that you need to, the states that you're going to be running payroll in, or you most often have it. See if you can do these things online, and what's going to need to be signed or managed by your client. Understand that process. Once the payroll is set up and once the registrations are done, then you can get started with it, but not until then. I tend to try not to run payroll until the registrations are done. I know some payroll companies will allow you to do that, but I've found that creates another headache. So I hold off on payroll until this is done. And the time of when we are setting up registrations, this is usually done during onboarding. So if they've already purchased payroll from us as part of our original sales pitch and the contract that we set up with them, then we set up their payroll registrations during onboarding. Once you're registered for taxes, then you'll enter that info into the payroll system and you can get started. Also, just a word about something called workers' comp insurance. Okay, this insurance protects employees from perils associated with their duties at work. It is not part of our engagement, but many times, almost all the time, I should say, workers' comp insurance companies, they need to see the payroll. They will usually want to see it on a sometimes quarterly or annual basis, and running the reports that the payroll company, or not the payroll, the insurance company needs to audit the workers' comp insurance, that is part of your job. That is part of our core offering. Again, I have tried to do something where I've experimented, I should say, with charging clients or somehow trying to make that part of an add-on or something, and trust me, it is not worth the headache. I have in many experiments almost lost clients over trying to push that to see if they would pay something for it, and they are really not very tolerant of it whenever I'm already paying or already charging them something like $106 or $120 to do their payroll every month. So it's part of your job running those workers' comp reports. It's not part of your job trying to find them insurance. Okay, so don't get into that. Don't feel like that is something that is also included in your package. So that's registrations. Now let me jump over into something you may already be familiar with because we talked a bit about it in the sales training and marketing 101, but that is the owner's compensation matrix. So now that we're registered and we are setting up payroll for our owners, we need to find the amount we need to pay them, right? And this is derived by the owner's compensation matrix, which I've put up on the screen here. Now, this is in several places. This is going to be in this module as an attachment again. It's in the Marketing 101 module. It is in the Halon Tax software. It is in the Facebook group. So there are lots of places to find this if you don't already have a copy, and you need to have one handy because you'll be using it quite a bit. The way that the matrix works, just to cover it a little bit in summary here, is you need to find the net income estimate, what you believe the net income of the company is going to be before officers and owners compensation, and then using this as a guide, come over, and this is what the minimum payroll needs to be. So on a net income of between $40,000 and $45,000, the officer's compensation needs to be at least $18,000 per year. If you believe it is going to be 40, that is between two levels, and you always take the lower. So if someone was actually going to be at 40, you can do $13,000, and we allow a 15% variance in the net income. So let's say you thought they were going to be 40, and then right at the end of the year they ended up being something like 45. We allow up to $6,000 in play in that 40. So that's 15%. So if you end up being a little bit under, that's okay. We've set that up. If they have a massive amount of money that they make right at the end of the year, you do need to try and figure out a way to make that payroll work, because if they go from making 40 to making $80,000 on December 30th, that's going to be a problem for Halon to insure you against owner's compensation audits. But that's how the matrix works, and like I said, you need to have this handy. It is critical too that you, and we're going to get into this here in a little bit, but it is critical that you make some kind of calculation to catch up payroll if you start payroll in the middle of the year, which almost all of you will. There will be some kind of calculation you have to run. So let's say that you're starting payroll in July, right? But they've been operating for the entire year, and you think that they are going to make $40,000. Well, they need to run that entire $13,000 over the course of that 6 months, so that by the end of the year, they are at $13,000 by December 31st. Don't set it up to where they're running, 1,000 and change each month, and then you get to the end of the year and you go, oh shoot, it's 6,000. You need to make sure in that first year that they're running enough to where they get where they need to be by the end of the year. And then when the following year starts, you can ramp that number down and have it be more ratable and allocable to each month, because you'll have 12 months to work with instead of 6. So watch out for that calculation a little bit. Now, since we're talking about owner's compensation here, let me bring up the Form 1120-S, this is the S Corporation tax return, and kind of show you why it's so important. I have a whole module about the 1120-S coming up for you later in this Accounting 1 training, but let me just bring this up and kind of show you where it goes. All right, so here is the 1120-S tax return, and you see line 7 right here, well, right here, if you can see my cursor, line 7, it's called compensation of officers. And so do you see how easy it is for the IRS to figure out who's not paying compensation of officers? It's right there on a line. So all they have to do in their system is run a query of who had that blank or zero, and they have very good audit candidates. Now, they don't really do it as often as I think they probably should, because I know that many, thousands and thousands of s-corps don't do this, but there is just a line for it. So pay attention to it. Make sure you're meeting or exceeding the amount in the officer's compensation matrix that we provide you, or Halon cannot cover you for audit losses related to owner's compensation and owner's compensation penalties. We'll still defend you, of course, and never think that we won't defend you. We will defend that tax return with everything that we've got. It's just when it comes to actually paying the fines, if the rules aren't followed here on officer's compensation, we're not going to pay the fines in the event that we were to lose with it. So that is a bit on the owner's compensation. Let's jump into a concept called full payroll or taxes only. Okay, next up is deciding if we want to run a full payroll each cycle or just the taxes. There are pros and cons to both. I do quite a bit more tax only than full payrolls, but we do both. Sometimes the client has a preference. Other times we have more than just owners on the payroll, so booking half the group as taxes only and the other half as full payroll is just more work than it's probably worth. Whatever you choose, be consistent for the client and make sure that your staff knows how to do both. Nothing is worse than looking at a set of financials and payroll expense is nothing and all there is on the P&Ls of payroll taxes. And that happens when you're running a taxes only payroll and they're not grossing it up correctly. Basically grossing up the compensation for the wages and the taxes. Instead, they're just rolling the taxes to payroll tax expense and there are no wages and you're actually not showing as much expense as you need to on the profit and loss. So if you are going to run any kind of taxes only payrolls, then just make sure the staff is ready to go on that. I tend to say if you're not sure which to do, run full payroll because it's easier to understand. It's easier for your client to understand. If you are good at explaining what the taxes only option is, because it has a smaller cash need, clients will appreciate it each month because they don't have to come up with nearly as much money to run payroll, but it is a bit harder to explain. So do what you're most comfortable with. There is no right or wrong here. You can use either way to do it. The next point I want to mention here is about when you're booking payroll and to make sure the wages and payroll taxes are on two different lines. Halon reads every line of the financials, both the balance sheet and the profit and loss. And if all of the taxes and the salaries are booked into just one big account called like payroll expense or something, we're going to throw a flag because the tax return has to separate those two amounts. The tax return has a spot for payroll taxes and the tax return has a spot for wages, and it also has a spot for owner's compensation, right? And we know you're going to have owner's compensation. And then if you have other non-owners running payroll, you're going to use the salaries and wages account. So the gross wages of the owners go into owner's compensation, the non-owners go into salaries and wages, and then the payroll taxes, which are the employer side taxes, right? Going all the way back to our first slide, the employer side, which is the employer, FICA, and the unemployment taxes, that should go into the payroll tax expense account, okay? Be sure if you are using a service like Patriot or Gusto, whichever one you're using, almost all of them have an integration with QBO and will make those entries for you. They won't make the entries for owner's compensation. That would be a good idea, right? If they want to be progressive, maybe I'll tell them that we need to have an owner's compensation section in that QBO setup. But at least you can get everything into salaries and then payroll taxes and then maybe journal over the owner's compensation out of salaries and wages. That way you've got them all on three lines still. But utilize that integration, making one journal entry or one entry is better than making 3 or 4, right? So definitely utilize that, because we're using these services. Pick up on that time saving feature. It'll save you a lot of headache and a lot of miskeying things. You know what I mean? So now that we have payroll set up, the question becomes, who's going to run it? Here's the formula, okay? If it's easy, we are going to do it. If it's not easy, they, meaning the client, is going to do it. And that has to do with how you explain the service to them, both when they are signing up and when you're setting up the service. When people tell me in a sales meeting that they have multiple employees, the first question I ask is, are they hourly or salary? This is because, and this is just kind of my preference, I want nothing to do with hourly payroll. For every 20 runs we do perfectly when we're running hourly payroll, they forget about that. And if we run one person 3 hours wrong once a year, it's the end of the world. And so there's a lot of, what I mean is there's a lot of opportunity for mistakes when you are running hourly payroll. There's opportunities to key it wrong. There's opportunities that they send you an email on Monday and then send you an email on Wednesday, thinking that you're going to compile all these different emails of changes that they want to make to their payrolls. And I'm telling you, you don't want any piece of it, because eventually you'll do it wrong and that's all they ever remember. So I try and find out early in the sales cycle, do we have hourly employees? This is going to mean that this isn't an easy payroll. If everybody's on salary, that means it is going to be an easy payroll and I can run it, because all I really need to do is go in and click a couple buttons and it's done. And if they're hourly, this is kind of how I explain things in the sales and in the setup, how I explain it to the client. If I get the question about running payroll, right, about running payroll in-house, I say my fee that I'm charging you for running payroll, mainly paying for the payroll service on their behalf and managing the setup and the tax process. It also allows us to review submissions and to book the transactions in the books. So what they're really paying me for is the setup, the management of the oversight of taxes and how it's all running, and then putting all of that information into the books. For their salary employees, we are more than happy to run, as we have, that is a very easy task. But for your hourly employees, we would like for you to populate that in the software for us. If you are populating them, then you can also run the payroll, because that's very easy. And think about what I'm saying here. I'm telling the client that I'm going to set up a system where they can enter the hours, but we do not want to do that because our fee does not include the actual keying and management of hourly employees. And you may say to yourself, well, then what are they paying for? Remember, they're paying for all the other things. Most of the money that they're paying you is to compensate for the payroll service. Just because you get it for $10 a month doesn't mean they would get it for $10 a month. They would have to pay between $40 and $60 a month to have a payroll service anyways, and they'd be doing all the keying themselves too. They would not have someone helping them set it up, and they would not have somebody helping them key it into their bookkeeping software. So that's really where our fee comes from. And we need to be really upfront about that, not just from the sales process, but also from whenever we're setting it up, whenever they actually buy it. Inevitably, you will get owners if you decide to key and manage their hourly employees. Inevitably, you'll get owners that don't send you the hourly figures until like 8 minutes before the payroll has to be run. You're hounding them, you're working on their file too much, and this lack of info creates inefficiencies. And I know that there's timesheets and software and things that can make this really easy, but that's also a big hassle to set up that you're not being paid for. So remember, you want 100 simple clients in your practice, not 100 payrolls coming, to the last minute of every month. So when you're selling these and setting them up, just push them towards doing it themselves or having a fee ready that gets you excited about managing hourly payroll. Something that you'll be excited about because it's so high, you're like, oh, this is easy money now. Otherwise, it'd be better off to just let them do their own payroll. And here's the thing. let's say you had 50 payrolls that needed to be run on the last day of the pay cycle on Friday or something, and all of them inevitably are running on the same Fridays. Will you have time to mess with 50 clients, hourly employees, all being submitted at different times because they have changes and different stuff they want going on? The answer is no. You won't be able to do 50, let alone 100. So keep this simple, and if you run into these more complicated situations, either they have to do it themselves, or really payroll is not really a good service to offer them because you're not going to make any money. It's just going to be a lot of headaches. And so this slide here is the last one before we get into the action plan. It's kind of a weird one probably. So, but here's the question. So what do you do when you set up an S-corp and they say they will set up payroll, but then they don't? So when you're selling them, they understand that they have to set up payroll, and then they say, yeah, let's do that a little later on. And then you're getting 5 months into the engagement and they still haven't set it up. And in fact, when you talk to them about it, they don't want to pay for it, or they ask it to be turned off. This is about a client who says, I am not going to run payroll, and I know that I'm supposed to be running it. Okay? So problem, right? A problem client. You will have some of these. I'm here to tell you, you will. It may not be in their first year, and it may not be in your first year, but 2 or 3 years down the road, you will have a client or two that emails you and says, hey, can we turn that payroll off? I know I'm supposed to be running it, but things are just really tight right now, and I don't want to run that payroll anymore. And in most circles and Facebook groups, if you asked other accountants what you should do, they would all say, they'd say, run, Forrest, run, right? I mean, they would be, everyone has lots of advice when it's not their business we're discussing, and even more so when it's not their revenue, right? People are full of advice when it doesn't cost them money. And so I'm going to tell you something that you probably won't hear in other places. While a client that does not run payroll is a pain, it does not mean you have to let them go. It doesn't. What it does mean is we have to take some steps. We have to do some things to make sure we are doing what we need to, and to make sure that we're covering ourselves. First, we have to make sure that we had a solid discussion about why payroll is a required element of the S-corp compliance and what can happen if they don't run it. Usually this discussion happens in onboarding, but if you aren't sure, if you're kind of like, well, did I really take them through that? If you're not sure, set up a time to chat by phone so that they know for sure. Then you're going to remind them a couple of times. You're going to remind them a couple of times over a month or two after you have that discussion, saying, hey, let's get this payroll set up. Let's get this payroll set up. And if they don't respond to you, or they continue saying, no, I don't really want to, if somebody has been with you for 3 years and they decide to turn it off, you're going to go into this next step, which is we're going to give them a mild threat. Okay? Just in case they think it's optional, the threat goes something like this. Hey, George, as you know, we have discussed setting up payroll a few times, or, I know you're wanting to turn your payroll off. And as the year end is approaching, I need to make sure I document your non-compliance, okay, that you're not going to have payroll or run payroll going forward. This is so if the IRS attempts to include me in any collection action, I have a document that shows we asked for compliance and that we were turned down. Do you mind if I send that over to you for signature? Now, what are we doing here? We're trying to scare them a little bit, right? But we're also trying to test how much they are convicted of not wanting to run this payroll. So if the client, if George in this case, if he says yes, then use the memo that I've included in this lesson to have him sign off on it. I've got a memo in the downloads that is a non-compliance memo, and you can actually have him sign off on it. Part of the memo is quantifying how much you ask them to run and that he has decided not to. When they sign, okay, if they sign that document and return it to you, put it in their file, save it somewhere in your files, and go on with your life. Run zero payroll. Halon is not going to cover them for the owner's compensation piece, but we'll defend them either way in an audit. We'll do our best still. And at the end of the day, it's their business. So our job is to show them what compliance means, and then if they don't want to do it, we move on. Now, this is not the same thing as someone trying to cheat on their taxes. This isn't in the same category. Now, if somebody came to you and said, well, I don't really want to have $100,000 worth of income, so I would like for you just to enter $50,000 as a miscellaneous expense. And you say, well, there's nothing in the bank account. What's that from? And they say, oh, I just made it up. You just put it in there for me. That is not something you will ever do. And you will tell the client, no, I will not. And if you want me to do that, I'm disengaging. You should, and that should be probably a warning sign that client is trying to do some things that are criminal. Owner's compensation is not that. They are simply making a preference that they do not believe that there is any compensation necessary to their employees, and that is a fight they can have with the IRS. But you have now documented it. Now, let's say that they don't respond to that. Or, same thing, they won't sign it. They go completely silent. Now you need to be worried and probably need to disengage that client. It means they are not, against you being on the hook, right? I mean, not signing that memo means they're okay with you being on the hook. And that should be the warning sign that this client's no longer working out well. Best to try and kind of find these types. And I do. When a client's brand new, I kind of push payroll in the first few months because I'm wanting to see if they're really going to sign up for it or not. And if they start to give me hesitation over 2 or 3 months, I tell my accountants to give them the threat, and then we get into possible disengagement if they're not going to run it. Now, how often does that happen? Very, 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 very rare. By the time we get to the point where we're giving them veiled threats, they usually set up their payroll. But if they won't, it's a warning sign and disengage. I wanted to mention this because while it is rare, you do need to have a game plan for it. And if it does happen, follow these rules, come back and watch this if you need to, and you will be fine. And keep that memo somewhere. If somebody is willing to sign that for you, then don't lose any sleep overnight not running their payroll. You've done what you needed to do. And now for our action plan, right? We have an action plan after every lesson now. And with payroll, it's just a few steps. First, we're going to determine frequency. If it is the taxes only or a full payroll run, and what employees they have, right? So we want to make sure that we understand what the payroll is going to look like first. Then make sure our registrations are complete. And if not, we're going to do those as part of our service. Next, make sure we have the matrix, the officer's compensation matrix amounts that are based on profits so far. And if they have any hourly employees, make sure that they are going to do the runs, or we have a very good workflow for how we're going to do the hourly payroll. Then once the payroll is run, we need to book to QuickBooks Online and make sure we're separating out the amounts into the correct owner's comp, payroll tax, and if they have employees other than owners, into the salaries bucket, right? That separation of information into the right places so that Halon can read it and put it in the right places on the tax return. And finally, if you have a problem client, document their non-compliance and disengage if they won't sign what you need them to, and they won't run payroll, because that is a bad sign of kind of a problem client. I hope that some of that at least was helpful even to those seasoned payroll veterans that are watching that. And if you've never run payroll before, this didn't cover everything. So make sure you go out and find resources on the basic running of payroll. The payroll software that you use will have lots of resources on how to set things up and how to run actual payrolls. So dive into that as well. But if you have any questions, don't hesitate to reach out to us. I've got lots more waiting for you in this Accounting 1 module, so I will see you in the next lesson.